Welcome back to Startup Accounting 101. It's a video series for founders and small business owners to understand accounting fundamentals for running a business. This is QuickBooks 101, which are the basics and best practices for the most used accounting software of small business, which is Intuit QuickBooks Online, or QBO. I'm using a sample company, which is Craig's Design and Landscaping Services. And if you have QuickBooks Online, you should be able to follow along. So we are in the products and services section. This video, we are creating inventory products. I created a video on the various best practices in creating products in QBO. So please watch that video and come back. So I'll link it up here in the right-hand corner. Because this video, we're just going to jump right into creating products. So we're actually going to start with finished goods inventory. So creating all new products, we start with new, and this is an inventory item. So the first thing we're going to create are single units or eaches. And so what I'm going to do is create my first candy bar. So we have here my first product line, which is the Dubai chocolate bars. It's going to be milk chocolate. Each bar is 12 ounces, and I'm setting up the single unit or the eaches. Now the SKU or the stock keeping unit. I put this here. So SKU is quite important for any inventory item. Anything you're going to track, and this is internal to you, but it's going to be used everywhere. So we're talking about the sales team will use it. It'll show up on customer POs and invoices. This is what they're going to order. On the supply chain side for procurement, freight and delivery, this is what is going to be used for warehouses to fulfill orders. When you're scheduling freight between locations, this is what's going to be used. So the SKU is quite important. So moving on to category. So I've set up a few categories. So this one, I want it to go under milk chocolate for chocolate bars. Now the initial quantities on hand, I'm just going to say I have 1,000 single bars that is available as of today. And in terms of the reorder point, I'm comfortable with 250. You're going to forecast, hey, this is going to be good. It'll get me through 3 or 4 weeks of orders, enough for me to either reorder or make or manufacture enough to replenish the amount that I need. Inventory asset, this is a finished good. So out of the inventory options, we've got the finished goods here. In terms of the descriptions for both the sales side and the purchase side, I like to keep it the same or consistent. Now, in terms of the sales price and cost, if I reference the sales forecast, this is basically a single bar, candy bar. It's about $4 per unit, and the costing is 39 cents per unit. So here, for a single bar, it's going to be $4, and the costing will be 39 cents. The sales or income account or revenue account, I have one specific for this product line, which is chocolate bars. COGS, same thing. I've got a chocolate bar COGS. And the last thing would be the sales tax. Here, in terms of the taxability of candy, when setting up tax, you want to set it up for, 80% of the time it's either taxable or non-taxable. So there are some complicated rules when it comes to candy and chocolate. So there's something called like the flour rule. If it has flour in it, like a Twix bar, it's tax exempt. If it's not, like, you know, the Dubai chocolate, I don't think there's flour in it. But if not, then it could be taxable. So for now, I'm just going to keep it as a taxable item because I'm not, like, here, the chocolate bar doesn't contain flour, or it does. I'm going to say it doesn't contain flour. And so QuickBooks will know what to do depending on the state and all these other factors. So now I've created one single bar. So I'll save and close. So now it shows up here as one of my products. And so I'm going to create another product for my wholesale customers. So in this case, I'm going to create basically the same bar, but people can buy them by the case or in a case quantity. So we've got the milk chocolate Dubai chocolate bars. These are still the 12-ounce bars, but you can buy an entire case. Now the SKU I'm going to have here, category is the same category, it's the same item, just a different volume or quantity. So here we have initial, we've got 500 cases. And I'll put the reorder point to 100. This is also a finished goods. Everything in this video will be a finished good. I will repeat the description in sales and purchase. Now we go back to this forecast. There's a different price for the wholesale versus direct. So I'm going to set this as $2.50 per unit or per bar and 39 cents per unit for a wholesale candy bar sales. So with QuickBooks, there's no BOMs or bill of materials. So here, because it's being set up as an entire case, I'm going to have to do the math a little bit. So the sales price for a single unit was $2.50, but there are, in a case, there are 12 chocolate bars in the case. So I have to do the math. So $2.50 times 12, that's $30 for the sales, and I have to do the same thing on costing. So 39 cents times 12, that is $4.68. So I have to do the math for the case quantity. The income, it's still going to be the same product line, chocolate bars. COGS, also chocolate bars. Now, when it comes to the taxability, when setting up for the case quantity, most likely, if a retailer is, if I'm selling to a retailer, they are likely, like if that retailer is Target, Costco, or Walmart, there will be a reseller. So the sales that I make on a wholesale basis is likely not taxable for me. Again, 80% of the time. There are cases where people might want to have a bulk discount, and you might be able to offer on your website. Somebody can buy a whole case, and then in that case, it would be taxable. But again, setting up products, so in terms of best practices, number one would be when you set this up, set it up for, 80% of the time, 90% of the time, it's going to be this way. So whether it's a taxable or non-taxable, you will set it up for the majority of people. So that's the first thing. So the second best practice specifically for finished goods is to set up all unit of measures that you need for the business. So in my case, I set it up for a single bar, so 1 inches, and then I set it up for a case. If I was also going to sell in pallet quantities, I would set that up too. So set everything up. And then thirdly, the last best practice is about costing. I would refresh the costing here on a regular basis. There's lots of reasons for the cost to fluctuate. One of them could be a positive thing, like when you're renegotiating contracts with vendors, you might be able to get volume discounts. So the costs won't necessarily always go up. It could also come down when you start selling and get those bulk volume discounts. If you have stable costs, then you could get away with doing this costing refresh less frequently. But I would recommend at least doing it once a year, specifically at the end of the year. For audited financials, at the end of the year, you're going to want to be able to justify the costing of your inventory and also your cost of goods sold. And with costs, again, QuickBooks does not have bill of materials, or it does, like, we don't know what makes up this $4.68, what type of raw materials, what kind of packaging gets you to this sort of landed cost. So you're going to want to have a separate spreadsheet or work paper that spells out, this SKU here is made up of these types of components, as well as freight in expense, and all of this together gives us the cost of this case for the SKU. So you're going to want to have that as sort of backup for your costing. So with that, so the next video we're going to look at some of the breakdown. So we're going to be creating raw materials, a different type of inventory for your business. So like and comment if you enjoyed the video, and please subscribe, and thanks for watching.